I haven't spoken yet. Don't worry. I've just been pondering my existence. We'll give it till about 3 minutes past or so, just to give everyone a chance to get in, and then we'll crack on. Tomas can't make it today, so you're stuck with me, unfortunately. How's everyone's week been? Yeah, I think you're actually spot on there, Charlie. It's the only time of the year where you can pretty much just completely shut off the markets, I find. Because there is no doubt in that the markets do get quieter because the sort of banks, etc., finish up for Christmas, and it is nice to just be able to shut off. Whereas every other part of the year, I think you're always constantly sort of looking at the markets. Where I planned on not trading this week, but then AU is looking pretty clean, sort of coming into London this morning, so I did end up taking a break even. But yeah, no, you're absolutely right. Nail down the trading plan, back testing, whatever it is you need to work on. The next 3 weeks is the perfect opportunity to do it. Oh, last December was crazy. It was just absolute torture. I don't think we'd never really seen market conditions like that before this strategy, and it was just as pretty much from the first week of December to the basically the first week of January. It was just range bound. It was a nightmare, and that was without the internal structure concepts as well. I think it probably would have helped us a lot. Like, but back then it was just yeah, it was tricky, tricky times. Right, so I'll crack on now. Just Tomas can't make it today. He has something on, so I think he's gonna record a recap of the week for the DAX and then upload it to Discord or upload it to the website or something. So you will hear something from him today, but he just couldn't make the live call. So I'll start with euro dollar. I'll just go through basically Monday, Tuesday, and Wednesday's price action on EU and AU, and just sort of go through what I was seeing. Only took one trade on AU this morning. EU yesterday was a bit of a frustrating one because it's pretty clear the path least resistance was to the upside, but it was just pretty difficult to get involved. Just the price pretty much just ranging coming in the news, which is a tendency to happen. But I'll cover it all on it. So on EU, obviously we had the bullish break of structure here, so we switched bullish. Looks like we're going to see a pretty decent pullback now. Maybe retrace. Pretty much that was the basically that's where we opened in January. So we've pretty much retraced 50% of that move. Which, considering how we've retraced more than 50% of the move. So when you consider how bearish the whole year was, it's pretty crazy that we've retraced that pretty quickly. Pretty much bottomed out just at the end of September. So to retrace that in less than 3 months is pretty decent sign of bullish intent. Obviously, I've been identifying this POI for the last sort of few months probably. It's very clear demand. It's in the discount of the range. It's where the demand came in that caused price to close above here, and it also caused this IBOS as well. So price will probably come back here at some stage, and we'll probably get a very nice reaction to it. But when that happens, is anyone's guess. Had this IBOS yesterday. Had that marked on. So obviously pushed up, had this bit of a pullback, bullish IBOS, bit of a pullback, and now another bullish IBOS. So clear bullish order flow. Was anticipating we might see a bit of a deeper reaction from this supply, but obviously just pulled back slightly and then pushed up, which again does show the sort of amount of bullish momentum that we're seeing in the markets currently in EU. Again, we've come into this POI, very likely that, it's swap liquidity. It's pretty clear POI. It's very likely we could see a pullback from here. Now, how deep is that pullback? It could just be to here. Because obviously that's pretty much what happened here. We had these little buy to sell wicks, and then we got the bullish eye boss, and then pretty much the next candle just pulled back in and mitigated the wicks and pushed up higher. So we may see, I'd say it's likely we'll see a bearish reaction from here, but it may just be into here before continuing higher, or it could potentially be the catalyst maybe to sort of give us the deeper pullback down to here. But obviously the daily takes a long time to play out, so sort of had to give a forecast based on the daily over the next sort of week or so, I would say it's quite likely that we'll see a bit of a bearish pullback to at least here. So drop to the 4 hour. So obviously 4 hours bullish. This break of structure here, and then yesterday following the news announcement, we got this break of structure here. See, the small internal and the large internal are both bullish, because you could see we had this range here that was being respected, and you see price was pulled back into it, and then we also within that we had sort of the small internal trend, which was basically with a bearish II boss there, and then a bullish II boss there. So at that point everything's aligned. Swing was bullish, large internal is bullish, small internal is bullish. So once we got this sort of small internal boss, it's very likely the price was going to basically do that and run the week high. As a bonus, we even had this sort of clear liquidity to target where you had the equal high. So this was sort of the bit of price action I was talking about yesterday, where it was pretty clear that we we're going to get the break of structure with pretty much everything being bullish, and with liquidity to target, like everything was there, that basically this was going to happen. But you can see basically had the II boss pull back into the demand, then we're pretty much just sort of ranging around here, which wasn't ideal. Yeah, it was just it's clear in the M15, but it's just, ideally you want to sort of see price come in and then just continue higher, whereas the fact that this low had sort of failed to follow through and take out the high, this was potentially weak. So it wasn't ideal trading conditions, but as you can see, everything was bullish. So the expectation also was that price is going to run these highs and form another bullish break of structure. Obviously we come into the daily supply following the news announcement. So this morning pretty much it made a lot of sense to look for sells to just take advantage of this pullback. Obviously we had this internal range as well. So when price sort of sitting around here this morning, price hadn't mitigated the swing range or the most recent internal range, so sells are pretty high probability at that point to target the EQ of the leg or either the range. And then that's where a lot of people can get caught out quite badly, is say a price comes down here and mitigates this range, and then we get a bit of a pullback here. People keep sort of aggressively looking for sells here to target the next leg down, which again, look, it's valid, it makes sense to do so, but when prices sort of mitigated the ranges, it's possible that the pullback is complete, that basically we only had there was a lot of bullish momentum, so it's possible we only had the bearish pullback to mitigate the range, and then we're going to continue higher. So if you want to get in, if you want to try and play the swing pullback, you want to basically be getting in as high in like the premium and the discount as possible, so that you have decent risk to reward to sort of the next inflection point, whether it's the EQ or the internal or swing ranges. So that's pretty much been EU all the week on the 4 hour. I'll drop the M15 now and go through sort of each day's price action. I'll try and reference the 4 hour as well as I'm doing it. So Monday. So that's what I mean. You can see on Friday we had basically had this huge wick, which was a news announcement. We obviously mitigated this demand at the extreme of the swing range. So very likely the pullback was complete. The M15 was bullish. That was a most recent break of structure. So we were anticipating price to pull back into the demand and continue higher. The fact that, it was the demand at the extreme, it was the last point that had to hold if the bullish trend was to continue. But then sort of when we came down here, we had this sort of IBOS. So technically the internal was bearish. So it wasn't ideal that we sort of pushed down and then sort of pulled back into this range, because it was possible that we could continue lower and run this low, which again, it was just it's sort of mixed signals. And obviously swing always takes precedent over internal. So we're expecting sort of this low to hold, but it just wasn't ideal the way it didn't follow through. Then we had this sort of liquidity printing as well. They're sort of equal lows, which was sort of suggesting that basically these could get swept and then maybe we'd see the sort of move. But yeah, it is still valid to look for longs, but it's just not ideal that this basically range held, because it was possible the price is going to do that, particularly with the liquidity built. Now I've just played on. So yeah, we got the bullish M15 chalk, I chalk. It's not technically a chalk for somebody calls me on that, but you can call it an I chalk, but it's like, personally the way I view a chalk, if you want to be completely mechanical with it, yes you can. If you're new, that's probably the best way, but I'm just looking for a sign of bullish intent, and for me that was the most recent fractal high there. So I just sort of branch it all out. I just sort of group it all as a chalk these days. So then we did obviously have this demand where it was valid to look for longs, but then again, this low was weak at this point, as it had failed to follow through and cause even an IBOS or a break structure. And then you can see like pretty clear equals there, that low there. Just personally, I was sort of just happy to leave it and wait for something clearer. Price pull back in. I'll drop to M1 here. Yeah, there was a valid loss here. You could have looked at setting the risk entry on this here, but it's pretty aggressive leaving a risk entry there, in my opinion, when you've got the extreme pretty completely unmitigated. But one, I'm sort of looking into risk entries more myself in the M1, and something I notice is when you get the strong liquidation in front of them, they do play out quite well. But it's just in this case with the extreme completely unmitigated, I would have been inclined that if I leave a risk entry here, I would have left it there as opposed to this one here, because it just wasn't the cleanest to me in the moment. You can see we got the strong liquidation where we basically had the fake chalk just at that inside bar. So you can see it's strong liquidation because obviously if people looking to enter on the chalk, so you get the chalk there, people look to enter here, so their stop losses are below this low. So whenever that low gets taken out, that's basically your strong liquidation. And yeah, that was a valid loss on the confirmation entry where you basically got the second chalk, because like if your mitigation, your M15 demand that caused the M15 I chalk, you have strong liquidation, you have pretty decent V shapes, not ideal. You can see sort of it's quite clear that following the chalk, it's a bearish candle, large wick. It wasn't ideal, probably a warning sign, but like personally, if I was looking at it there, I would have had my entry set sort of as soon as price formed the chalk, because again, if you can see it, drop to 15S, you can probably see it cleaner. Yeah, it's like when the M1 candle was forming, like that would have been a strong sign of bullish intent. It's like, price could have kept going. So it's one of those things like you can't really see in the future. But it's completely valid loss, and then I believe the risk entry played out. Yeah. So yeah, the risk entry would have been the one there, and then there was a valid loss on the CE if you wanted to play it. But sort of as I said on the M15, I wasn't that massively enamored with the overall area. I was sort of happy enough to leave it. You can see then started to push up quite nicely. Yeah, and that's pretty much London. There was the couple of potential entries down there. The risk entries played out, or else the loss on the CE. Obviously had this POI as well, but price didn't pull back into it, so there's no entry there. And then yeah, that was pretty much London. Unfortunately, price was pretty much rocketed up from there. It didn't really pull back into any valid demand. I'll just play it on to New York now. Right, so coming into New York, obviously we got the bullish IBOS whenever price closed above that high. So at that point, swinging and turns are aligned. It's not ideal. We still have this liquidity resting here. That could be used. I know there's news coming up at 1:30 yesterday, I believe. So again, it wouldn't have really surprised me if price had come down and basically swept all that liquidity, because what you tend to notice is when there's major news announcements, you tend to notice that price just builds liquidity in both directions. That's why it's often obvious in hindsight whenever a news move plays out and you can say, oh yeah, it was clear, blah, 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 it did this, it did this, it was always going to go that way. But it's in the moment, like usually price, it's building liquidity both ways. So that whichever way it goes, it has basically the liquidity to fuel it. And if you look here, you can see pretty much at the equals there, and then the relatively equals here. It sort of becomes a bit clearer whenever we get the sort of deeper pullback here. But so it essentially built liquidity both ways. So it wouldn't have been a massive surprise which way price went. I think it was looking for following the IBOS. A lot of the times price just keeps mitigating demand and keeps going. So I think I was looking for an entry within this M15 POI, but I don't think one set up. Yeah. No, nothing set up in the M15 POI. Then obviously following the IBOS, as with a swing break structure, it's valid to anticipate a pullback to sort of demand in the discount. Perhaps this one here. I wasn't a massive fan of this POI here, just purely because it wasn't that clean in the way it formed. It sort of feels as though price just sort of trickling up. It didn't sweep liquidity. You can see there it's pretty equal lows with the inside bar there. It did have inducement, which is something, but wasn't the biggest fan of that POI. But obviously following the IBOS, if we get a bearish M15 shock, you can look to play essentially the internal pullback, where you just basically look to follow the M15 supply mitigations to sort of play the pullback down to the discount of the internal range. So we got the bearish shock there. Just at that candle there, so that gave us this valid supply. Now it wasn't ideal. There was like perfectly equal highs behind there. It's not that clear on the M15, but if you go to the M5, you can see it's pretty perfect equals, which is never ideal. We trading from a POI with perfect equal highs behind, and there wasn't usually whenever you get like a really clean M15 shock, there's a pretty clear sweep liquidity, and then you sort of get the pullback. In this case, there wasn't really that. This was quite sort of messy price action. There was no massive sweep of liquidity there. But yeah, it was valid following the shock to look for a sell within there. Price comes into it. There was a valid entry, I believe. Yeah, it was a pretty clean entry model actually. We had the strong liquidation of this high. That high was a strong liquidation because we had the fake chalk at the inside bar, and then you can see price pushed up, swept this high, and mitigated the extreme. So there, covered pretty nice confidence factors there for a sell. Got the chalk at the inside bar, even technically got the M1 IBOS there if you want to count that in your analysis. The extreme was pretty much already mitigated by that next candle. So for me, the obvious place tender would have been there. And I believe it resulted in a pretty quick loss. Yeah. But completely valid if you want to be aggressive playing the M15 pullback. But it was sort of, again, you can see there in the M1 just the perfect equals, which probably explains why it didn't play out in this occasion. So now you can see in the M15, price failed to close above the high, which again isn't a massive sign of bullish intent. Yeah, just whenever price is struggling, like close above the highs, you can see we struggle to sort of close below this low as well. It just sort of signals an indecision to me and just sort of tells me that I probably need to be a bit more cautious and just sit in my hands. Just play it on. Yeah, there was a potential entry within this demand. Now, personally, wasn't the biggest fan of this demand. If you take the internal range, it was in the premium. This was the EQ of the internal range. This range was completely unmitigated, so price was always likely to gravitate towards it. Had this sort of engulfed candle in it. It swept liquidity. It was in the discount of the internal range. And then just the fact the price failed to close above there. And then this was also technically a bearish M15 shock. So there's just a lot of bearish confidence there. Yeah, the main reason I was personally looking was just that sort of pretty clear sweep of liquidity. And then you can see pretty decent amount of bearish momentum there. So bear in mind, you have the sweep liquidity, a lot of bearish momentum, and then you look at the entry model in the M1. It's just about as aggressive as it gets, to be honest. Yeah, you can see it wasn't quite a flip because price didn't quite mitigate that range. But you got the M50 or you got the M1 shock at the red line, and then just sort of pulled back into this little range here, pushed up. Then you sort of had the possible DCE here as well, basically where when price closed above that minor high, and then you had this here because you're essentially following the mitigations at this point. This was mitigated by this. This was mitigated by this, and you're just following the M1 mitigations at this point. But played out very nicely in this occasion. But yeah, it's not a very high probability trade in my opinion. Yeah, mainly just because of the M15. And the entry model is very aggressive. Like the entry model was way too aggressive for the POI where it was, and sort of the overall M15 price action with the sweep, V-shaped recovery, etc. And you can see we swept the high again, no close above, and just huge V-shaped recovery. So yeah, just quite messy price action. Twice failed to close above the high. Just yeah, just messy. It's not sort of price action I want to be risking my capital on. And then that was pretty much New York yesterday. So there was the potential loss in here, and then there was the potential buy within here. But as I say, personally, that buy is way too aggressive for me. But it makes sense, but it's too aggressive. And I think if you took that and you profited from it, I think you really need to. Well done, first of all, but I think you really need to understand why it's on the more aggressive side and why it might not be the highest probability trade. So that was Monday. I'm going to go to Tuesday. Yeah, yesterday's price action was pretty horrible. So just do a quick recap of the 4 hour where we're sitting. So obviously everything was bullish in the 4 hour swing, small internal and large internal, all bullish. So obviously massively favoured price running this high and sweeping that liquidity. If I could position myself along based on the M15. So following the IBOS on Monday, we pulled back to basically the extreme of this range. So again, swinging internal still bullish on the M15. So path of least resistance was the upside. You could also argue that we had this like IBOS as well, which is another sign of bullish intent. So everything was pretty much looking bullish. Coming into London with no close above this high, obviously at this point. So that's not an IBOS because there's no close above. So potentially this low was weak, and we had this sort of demand at the extreme as well, which price might have come down towards. So at this point, I would not have been very keen on looking for an entry within like that POI, for example. So then we got the close above, such a bullish IBOS, but we mitigated this supply. Again, not the best supply, but it is there. You know, it's swept liquidity, a lot of momentum coming into the market, so it is something you have to be aware of. But overall, the main problem here was this high was weak because it failed to cause an IBOS or a break of structure. This low was weak because it failed to take out this high here. It was just quite messy price action. It's like whenever you hear Matt or myself or Tomas say the price was range bound, it's just sort of, this is what it was, like overall favourite buys, but just nothing massively clear. Now if you play it on, yeah, see, I don't think there's any potential entry within this. Come on, I know. Let's double check. No, there's no chalk running. You can see the chalk line was at that inside bar, so no chalk, no potential entry there. And then leave. Yeah, so then we got the small internal eyeballs here. And again, whenever the internal structure is confusing with like multiple layers, again, it's a pretty good sign to sort of sit in your hands. So yeah, that was pretty much London. Nothing there for me. I was happy to just sit in my hands and leave it, and then go to New York. So obviously there's major news during New York yesterday. So personally, whenever there's major news, it's sort of around, I think it was 1:30 around the middle of the session. So usually I just take the session off, to be honest, because generally price action, generally something like this happens where price just basically wicks around, chops around at the EQ of the range. You know, you could argue, oh well, there's a bullish chalk there giving you this demand here. You can, it's like you can look through that if you want, but like I think we're smack, if you take the swing range at the time, I think we're smack bang at the EQ of it. Yeah, so that was the swing range at the time, and you can see price was just literally ranging at the EQ, which is not a good place to be doing business. You want to be sort of ideally sticking to sort of the more extremes of the range. So yeah, there's nothing massively clear there, and then news came and price just absolutely rocketed. So no potential entries are on there in the M1 for me. Trading into news is absolutely not worth it, in my opinion. The risk of slippage is just too great. It's like you also want to think at scale. You know, if you're trading a 6-7 figure account, if you're trading a funded account, it's like, do you really want to risk losing 10-15% in one trade with slippage from a news announcement? On some occasions it might play out, but for me, I just don't want to lose that amount of capital in one trade, so I'm happy enough to leave it. And yeah, that was pretty much it. There was no entries around there in the M1. Yeah, and that is pretty much yesterday done, unfortunately. Overall, it's pretty clear that the path of least resistance was the upside, but it was just pretty hard to get positioned with the way a price was sort of just ranging. Now over today. Right, so jump to 4 hour. Obviously, we had come into the daily supply, so we knew it was possible the daily supply could cause a pullback, even if it's only to here. We had the M15 break structure following a boss, we can expect a pullback, and obviously we hadn't mitigated this range, the internal range or the EQ of the leg at that point. So lot sells were very good value this morning based on the 4 hour and the M15. So then on the M15, you can see we had sort of this push down, like with no chalk run in there, but like the chalk line's there, so you're expecting a bearish pullback, but you don't have a bearish chalk run. But if you want to be super conservative and wait for the chalk or wait for something to happen, personally, I'm just happy to read between the lines. This is imbalance, whatever you want to call it. It's not something that we really talk about much in Photon, but usually you expect the bulk of whenever you get a huge news move like that, usually you expect the bulk of that to be retraced eventually. So you can see we pushed down here, had a bit of a pullback, another push down, so that's an IBOS. And then obviously we had this pretty clean supply it was at the extreme of this sort of range, because this was obviously sort of the protected internal high because it caused this IBOS. So I was more than happy to look for sells. We even had liquidity printed here as well, which was likely to fuel the move down. So obviously I had this really clean POI, had a bit of inducement in front of it. So that was pretty much the obvious area. It was the only area really to look for a sell for me. And yeah, was happy, had my alert set there. You can see here we got this bit of a sweep. Didn't quite mitigate the POI. So obviously there's an M15 shock in there. actually, oh, yeah, that candle there. So with that supply, you could view that as basically price going early. So it was valid to sort of look for a sell in that supply. I will drop the M1 now, just see what happens. Yeah, you can see there was no chalk running within this M15 supply. So no potential entry there. That sort of saved us in this regard. And then obviously came into the extreme here as well, which I don't believe. Yeah, again, there was no chalk running in this whole move in. So it's pretty clean move, just price making pretty clear, higher highs on the M1. So yeah, if an entry model set up in there, I would have taken it, but just didn't set up. So nothing doing there. And then following that, obviously we got the bullish high boss. So at this point it was sort of valid to anticipate that price going to run this swing high. The one sort of caveat there, the one thing to be cautious of was the fact that we hadn't mitigated the EQ of the leg or this previous range. Because usually, price does pull back to value before we get the next leg to the upside. But, it doesn't always have to do that. We've had a pretty decent sign of bullish intent with the bullish high boss. So, yeah, but it was more than valid to look for longs at this point. I think that was pretty much New York done. Yeah, that was pretty much New York for me to look for a sell here. I would have wanted to see pretty much an M15 chop because obviously sells at this point were counter M15 swinging internal. So I want to see an M15 chop before looking for a sell there. And then you can see we sort of reacted to this supply here, but it had already been mitigated. It had already caused a move down. So personally, I was viewing that as likely just to pull back into supply for the next leg to the upside. Let's play it on to London now, or New York, sorry. We got the M15 chalk. See, it's just at this little candle here, and the reason why it's that candle is because you can see we had the push up which took the high. So whenever price took the high of that candle, the low of that candle became the chalk line. So we got the chalk there. It's just played all. So this is where it can be difficult. Yes, we have the bearish M15 chalk, but it's likely that the M15 chalk was only to facilitate the internal pullback into demand, and then you can see we had mitigated these little wicks, which were sort of completely unmitigated. So I much preferred probably the extreme at that wick. So I would have much preferred if you had sort of pulled back to here before potentially looking for the next leg to the upside. But then sort of the problem with that as well is that you have these equal lows behind, which could easily be used to fuel the next leg to the downside. So yeah, it's just quite messy price action. I've played on candle by candle. It's like there's no massive momentum or bullish intent there. Like technically you have a bullish M15 chalk there at that inside bar, but then it's just a wick. It's just not all that clean. And yeah, it's just I'm happy enough to sort of sit in my hands in these sort of conditions. This sort of section of price is a lot different. Like where you get, say, you have like sort of equal highs in M15, and then you get the sweep, and then you sort of get the chalk, and then price pulls back in. It's like when you have the sort of clear liquidation, the V shape, that's sort of a pretty solid sign of bearish intent. Whereas when price, like it's not. We had sort of initial V-shaped recovery with the retrace candle, and then price just pretty much struggling, close below the lows, inside bars, large wicks. Again, it's a pretty strong signal to just sit on your hands. Sorry, let me get rid of this. Play it on. Yeah, and then that is that. We sort of didn't quite mitigate this extreme wick. You can see if you drew it from there, it did mitigate it, but then you had sort of the large price didn't really engulf it. just wasn't really the cleanest zone. You could like filter it, but there's nothing really clear on any time frame. Like the M5s even sort of pretty highlights how messy it was. So yeah, and you could have maybe looked for an entry within there. But no, there was no entry model on it. You can see we sort of got the chalk at the inside bar, but then there was no pullback. So yeah, pretty messy price action this afternoon. But obviously got FOMC this evening, so could go either way. It usually sweeps in multiple directions, but I would be very surprised if this sort of liquidity here wasn't swept on price. Came down here and mitigated the EQ of the leg. But yeah, just quite a messy corrective pull down. Not sort of price action I personally want to be trading. I'll now jump to AU. If you have any questions on, we'll get to them at the end. So obviously AU is still bearish. This is sort of the swing leg. This is the most recent break structure, but internal is bullish, where you can see we had this IBOS, and then now we have demand ranges being respected on the daily. Now with the daily being bearish overall, we mitigated this supply here. It's in the premium. Swap liquidity, it caused the most recent break structure, so look, we could easily roll over to the downside from here and run the week swing low. But you can see we got the reaction from it, but all price did was pull back into demand and then pushed up and put in a new internal high. So price action was quite tricky over the last week because you pretty much had this battle between supply and demand. And it wasn't clear who was going to win. It could have went either way. Whereas sort of now that we've had this sort of another IBOS and it's a failed reaction from the high probability supply, I'd say it's quite likely that we could pull back into this demand and push up higher, or maybe see a bit of a deeper pullback to mitigate this demand here, which again is pretty high probability PY because it caused this IBOS, and the range is also completely unmitigated because you can see that's sort of the top of the range and price did not pull back into it. It just sort of continued up like that there. So yeah, in sort of the next week or so, I'd expect maybe more upside. You might see a bit of a pullback into here and then sort of continue higher. But the failed reaction to that supply is pretty significant in my opinion, as it could easily have followed through and just caused the new low. So that's the daily. 4 hour then we can see it's bullish. This break structure, and then we had the complex pullback into demand, and then we had another break structure. Yeah, you can see yesterday we had the sort of II boss here. So technically the small internal switch bearish. I'll tell you what, I'll go through this sort of on a daily basis as opposed to sort of covering the whole thing. Also whenever I'm going through each day, and the M15 will sort of jump out to 4 hour, but you can see internal is bullish. Then we pull back in to the swing and internal range, and then we had this II boss here. So once that happened, it's very likely the price is just going to continue higher and run this week high, which it ultimately did. Now we've come into sort of the 4 hour supply at the extreme of the daily range. You can see it's swap liquidity behind that little high there, so it's pretty high probability PY. So it's very likely that this could cause a pretty decent pullback, most likely into that demand there. I don't know why I have that dot there. That's not swing low. That shouldn't be there. Yeah, so having had the break structure, it's likely that we'll sort of get this pullback into this demand and then continue higher. So that is the 4 hour overview on the M15. So coming into Monday, just jump out to the 4 hour to minus or something. So we'd had this little IBOS here. Price closed above the high. So this was like the protected internal range. So I was sort of anticipating the price just going to pull back into demand and then continue higher and run that high. So that's how things are sitting on the 4 hour Monday morning. So massively favoured buys on the M15 in line with that. Came into M15 was bullish. We had this M15 break structure. We pulled back into this sort of wick at the extreme. Swap liquidity. This is obviously a swing low, so we mitigated demand extreme. We'd also had a flip as well where price pushed into that inside bar supply, pushed down, failed to close above, and then we got the failed reaction. So I was calling this sort of an IBOS and a flip. So again, decent sign of bullish intent. And then sort of within that range, we had this pretty clean demand where you can see that's where the sort of demand came in to cause this impulsive move, which caused the break structure and flip. So that was sort of the POI that I wanted to get involved from. Unfortunately, I don't think it gave an entry. Yeah, this saw pre-London, sorry. Yeah, so we mitigated this demand, pushed up. We only wicked the internal high, saying at this point, this low is potentially weak. So not ideal to be buying from, even though overall we could see the sort of bullish intent there. But particularly if you're new, just stick to like this is clear IBOS, got clear close above. So this was sort of the protected internal high, whereas here it could easily be a run. Just play it on. Yeah, you can see the little demand at the extreme held. But personally, I wasn't really looking to trade it at that point. I think that was pretty much London. London was pretty dead. Yeah, there was one potential entry. As I said, I wasn't really interested. You can even see in the M1 price failed to close above the high. So like it's even. You can see it's just sweep liquidity in the M1. There's no close above. So I personally wasn't overly enamored with trading from that M15 POI on account of it not closing above. But if you wanted to be more aggressive, you can see here had the fake chalk, basically where the first red line was the fake chalk, which gave us the strong liquidation. Then see we had the flip. And then that's our failed reaction then. So then, yeah, we mitigated the M15 demand. Wasn't the best demand zone as we've outlined, but then you can see we had the reasonable V-shape, sweep, flip, chalk, and then obviously looking for price to pull back into that demand for the entry, which it never did. And then again, there was potential entry here. Personally, as I said, the 4-hour and M15 were all systems go for buys in my eyes. So there was this supply here. It's a pretty obvious POI, but you can see it didn't sweep liquidity. It wasn't the best POI, but if you wanted to be super aggressive and sort of just look for an entry there, there was no strong liquidation, but you can see if you entered on the range here, I believe it would have been tagged in. Yeah, as I say, it's very, very aggressive entry, but you can see it's like all the sort of supply above the ranges are all mitigated, and then this was sort of the little range that caused the bearish chalk and the flip. So the entry model in isolation is pretty clean, but it just wasn't a massive fan of the overall area. And then that was London. So coming in New York, obviously had the massive conviction that this high was going to be run. Given how the 4-hour and the M15 were sitting, so we had this sort of pretty clean demand at the extreme. It caused this IBOS. I wasn't too worried with this supply, to be honest. I thought it's pretty minor. It was all systems go for buys in my eyes. So this was the POI basically where I wanted to look for buys from. And if I just play it on, came into the POI, and I don't think there was an entry. No, there was no chalk. They were perfect equal lows on the forex.com data feed. So there's no chalk around there. You can see it was just a pullback into the M1 supply before tanking. So there's no buy within it anyway. And then in the M15 then, when we had the bearish IBOS, you could have potentially looked for like a sell from one of these supply zones, but you're still trading into the 4-hour demand. And this low was strong in the M15. Yeah, it just wasn't. You're selling in the discount of the range. It was just personally too aggressive for me. But yeah, I don't think there was any entry on there. No, it didn't quite mitigate the M15 POI that I was looking at. Then you can see we got the bearish break of structure, but we mitigated basically the 4-hour demand. So when you look at how sort of corrective that whole push down was, it would be no massive surprise if basically we only switched bearish to mitigate the 4-hour or the 4-hour demand, and then the M15 switches bullish again. But yeah, that was Monday. Jump to Tuesday now. Yeah, so as I said, got the M15 break structure. So the M15 was bearish, but then we mitigated the 4-hour demand, which I show you here. Yeah, technically we had the bearish 4-hour IBOS and price closed below there, but we had this sort of demand that was unmitigated. So I was aware that large internal and swing were both still bullish. So I was aware that this could have just been to mitigate this and then continue higher. So although the M15 was bearish, it wasn't completely welded to the idea of sells. Now, obviously we mitigated this supply here, had a bearish M15 shock, so it was valid to sort of look for sells in there. Don't believe that was during session hours. Yeah, that all happened before London, and then got this bullish IBOS, whatever you want to call it. And we had this demand here. It's a flip zone. It's a flip zone because it reacted to the supply, got the reaction, and the reaction failed. So it's valid to look for buys from there, sort of in line with the idea that the 4-hour demand may hold. I don't believe there was an entry model. No, there was no chalk, and then obviously no chalk random in here, and then obviously the demand failed. So that was that. Overall, it's just quite messy price action, to be honest. And then you can see obviously this range held. Unfortunately, didn't mitigate the extreme, but you can see we just sort of mitigated the discount of the range and then pushed to the upside. So then coming into New York, it was just pretty mixed signals. Sort of knew there was a very good chance that the 4-hour demand was going to hold, but the M15 was bearish. Yeah, it was just pretty mixed signals, and then there was massive news at 1:30. So yeah, I didn't even trade New York yesterday. I was just pretty much happy to let it sort itself out. I'll just play it on. Yeah, you can see. Got the huge move to the upside. We mitigated this demand at the extreme. Obviously I never traded in news, but you can see swept liquidity there. Had a bit of inducement in front. This was no surprise why it held, but price had failed to close above the high at that point, so the low was potentially weak. Yeah, as I say, highly advise against trading in the news night was on it, but there's no potential entry there. And then today, so again, we mitigated the 4-hour demand. Makes sense to look for a pullback. No bearish M15 chalk, but again, the chalk line's way down here, so it's not really feasible to wait for that. But you can see clearly we have sort of supply range is being respected. So I had this pretty clear POI at the extreme of the range. Swept liquidity, had a bit of inducement in front of it with a sort of high here. So it's decent POI. Hadn't mitigated this range or the EQ. So knew there was a high probability of us seeing more downside. So this was had an alert set here, and this is where I wanted to get short from, knowing that there was a good chance price was going to run this low at a minimum. So then came in. The PY is not showing there. Yep, so you can see a couple of liquidations had the sort of equals there, and then we had this sort of high. Got the chalk. Chalk was at the inside bar. Wouldn't technically there's an entry there in that red zone, but there's no V shape. It's not really an entry I take, but then you can see it was respected. Respect to the supply says your first sign supply in the M1 is taking control, and then huge V-shape recovery, which is exactly what you want to see. So yeah, I really like the M15 story. Got the V-shape recovery, chalk. Yeah, all systems go for me. Tagged in, got it to break even there, and then yeah, it was taken out. No, I was taken out here. But thankfully it didn't tank after. Whenever I saw this sort of bearish momentum coming in, I thought it was going to tank without me. But yeah, break even. Very happy with the entry model. Very happy with sort of the M15 framework. It's just one of the things. It didn't work out in this occasion. So play it on then. So then we got the bullish IBOS here. So at this point, swinging and turning are aligned. However, I was still slightly cautious because we hadn't mitigated the EQ. Usually, when you want the swing pullback to mitigate the EQ of the leg to sort of tell you that it's likely over. And in this case, that doesn't happen. So I always knew it was possible that price would continue lower, but still had the bullish IBOS. So swinging and turning aligned, we had this sort of pretty clear POI. You can see it's a flip zone because obviously it reacted to the supply. And it's where the demand came in that caused the IBOS. So I was more than happy to look for a buy from there, but I believe price didn't mitigate it during session hours. No, it didn't mitigate it during session hours. Wasn't interested in an entry from this supply because it was counter M15 swinging and turning at that point. So I would have wanted to see M15 chalk, which we didn't get during London. And then just play it on to New York. Yeah, so coming into New York, we had the bearish M15 chalk when we got the wick break here, but you can see just how pretty corrective it is. It's not, it's not as I illustrated earlier where you get sort of the sweep the equals and then the real aggressive momentum, that sort of chalk. So wasn't massively convinced by this. Was happy to look for a buy within here, but I don't believe on set up. And we came in. Yeah, there was potentially an entry, but again, the entry model is pretty much just about as aggressive as it gets. You just have the inside bar chalk. You can see you have the push down, pull back in a supply, failed reaction. Sorry, I didn't explain that very well. No massively clear V-shape recovery, no massively clear liquidation in the entry model. It's just a very aggressive entry model. Obviously, it played out in this occasion, but I think on the balance of probabilities, if you take it back to here, let's say it's when I'm looking at that point, I'm just sort of thinking it's very likely that price going to liquidate that low is a strong liquidation. But I like the POI, just the entry model is a bit too aggressive for me. And then that played out, I believe. Yeah, nice bit of bullish momentum. Back to M15. So now we had the bullish M15 chalk, which again is an eye chalk, sorry, before somebody crucifies me. Got the bullish eye chalk there, giving us this sort of demand at the extreme. So we mitigated this flip zone, which caused the IBOS, pull back into it, and then the bullish eye chalk, which again, a pretty decent sign of bullish intent. So made sense to look for a buy within there to potentially target the weak swing high. Just play it on. So we came back in. This was a pretty nice entry model, to be honest. You got the chalk here. Had this little flip where you can see pulled into supply, got the reaction failed before we got the chalk, so you could have entered there. But there was also another entry here where you basically had the M1 break structure. You can see the nice sweep there as well. So yeah, it's a pretty nice M1 entry, and you see price pull back into it and respected it quite nicely. Yeah, there were a couple of nice entries, to be honest. I was sort of sleeping this afternoon whenever they were playing out. Let's see how things are sitting now. Yeah, this is again pretty typical of what happens whenever you have major news. That basically price just ranges around. You can see we wicked the high there, but didn't close above it, and just quite messy. That's why I think Matt said on Monday with the just the week there was in it, a lot of news coming into Christmas, that he basically just wasn't trading. I just got enticed into the market this morning when price coming into this POI just because it looked pretty clean. It was pretty clear to me that the pullback was likely to continue to run this low to mitigate the EQ. So, and then the entry model was pretty clean as well with a strong V shape. So yeah, I was more than happy to get involved there. That's AU and AU. Just literally one trade this morning on AU for a break even, and that'll probably be me done for Christmas now, to be honest, unless there's something very clear sets up. So, does anyone have any questions specifically about EU or AU or any other aspect of trading or anything like that? I use forex.com data feed because I used to use IC markets, and everyone said IC markets was, or data feed was closest to forex.com data feed. I don't actually know if it was because I also executed on MT4 on it, so it didn't really make too much difference, but I think that's why most people use forex.com. 2023 trading goals. Yeah, I want to finally go for funding in January. Sort of put it off for years, and I think that's pretty much just it's time to bite the bullet with it. I'm glad. I think the last 6 months have been pretty tricky, so I'm glad I wasn't really I'm glad I wasn't really funded, because I think it would have added another dimension of pressure. Whereas the tricky market conditions, I think, would stand us sort of going forward, because every strategy has good periods and bad periods, and like everyone can make money in the good periods, but to go through the bad periods and have to sort of adapt and figure things out, you literally you can't buy the experience from that. Like, so yeah, hopefully do that in the start of the year. US 30, I've never really looked into it, to be honest. Tomas trades DAX. He's more into the indices than me, but I don't think he trades US 30. My understanding is that liquidity is a lot more important with him, but as I say, I haven't really any hands-on experiences. Yeah, besides funding, Charlie, I would say I want to get an M15 strategy going alongside the M1 stuff, which is, I think, myself, Matt and Tomas are working at that, so hopefully we'll have something pretty decent to bring to you in the first quarter. But yeah, I think having the higher time frame on the M1 will be quite complementary, because when the M1 doesn't provide the entries but the POIs are still being respected, you should be sort of taking advantage of the moves either way. I have zero spread with me. I use fusion markets, so I use zero spread, or I get zero spreads. Highly if you can use fusion or IC markets or one of those with zero spreads, I would highly recommend it, because I think it's quite important if you're executing on the M1. Yeah, probably January, to be honest. I'll probably just bite the bullet and go for it. But yeah, I'd say January. To be honest, I don't. I just flick between the two, do my analysis on TradingView, and then I'll just jump over to MT5 or MT4, whichever I'm using that day, and just place my entry there. And as I say, it's zero spread, so I just sort of go by that there. Why not January? That is the question. Yeah, I don't know. I was planning on doing it on in Q4 this year, but just sort of time got away from me, and then it was coming out of Christmas, and I just said leave it. But some people will say that December's a bad month, January's a good month. I don't really buy into that, and I think it's important that you don't buy too much into that, because I think it's important to us just show up to the markets with the same mindset of, if an entry presents, I will execute it. Like, rather than, it's easy to, if you have in your head that January is a bad month or December is a bad month, and you're sort of subconsciously not there 100%, you can miss a few trades, and then all of a sudden you realize you could be sitting up 20% for the month, but you missed that because you had in your head that it wasn't good, that it was going to be a bad month. Yeah, spread hours personally is one of my favorite aspects of strategy. I used to sort of trade a slightly more swing approach, and I just love the fact that I don't have to really deal with spread hours or holding trades over weekends or overnight anymore. I'm generally in and out in the same day. Um, New York or London, I trade both. Um, Probably prefer London, to be honest. I think my results are slightly better in London, but I'm also slightly fresher, which probably I'm fairly sure does have a pretty big impact on why I prefer London, because I'm just fresher, I'm mentally sharper, and my results are slightly better. But look, Tomas and Matt only trade London, and I know from talking to them that there's some months where most of the trade sets up in New York, and they don't take advantage of them. But look, it is what it is. It's like, you can make your choice, do it suits you. I personally like trading the two. They prefer trading one because it feels it suits their lifestyle better. So just do whatever is best for you, because ultimately that's like, if you only feel fresh in London and you feel completely drained coming to New York, and you're forcing yourself to trade New York, then you can end up making bad mistakes, which can cost you in the long run. So just ultimately find what works for you is massive. Personally waiting for an M1 strong liquidation. To be honest, these days I'm waiting for a strong liquidation in probably, I'd say maybe 90% of the cases, to be honest, just because the big thing for me with it is that it's completely mechanical. It's like a liquidation used to be a massive area of discretion for me, and I feel a lot more comfortable just trading when I know sort of exactly what I'm looking for. And I would say the 10% of the time that I don't use it is when I absolutely love the sort of POI, and I absolutely love, it's like the M15 intentions are clear. Like say this morning, whenever price came into this POI, and I had pretty high conviction that price was going to continue lower to mitigate the EQ. It was the POI at the extreme of the internal range. Like, it was, if this was going to get run, then this was the last point that had to hold. So it's whenever I really like the M15 sort of framework and really like the M15 sort of POI, that's when I'll be sort of more aggressive with the liquidation. And without a flip, I'll always prefer it if there is a flip, because it's just a sign that basically supply is overpowered demand, or vice versa, which obviously, as well as having structure on your side with the chalk, you also have the supply and demand on your side. I much prefer it, but I don't really have any strict rules when I'll wait to see a flip and not see a flip. I'll generally sort of take each setup on its own merit. If you want to be more conservative, your strike rate will definitely be higher if you always wait for a flip, but you will miss trades as well. Like, so again, it's up to you what you want to, it's up to you how aggressive you want to be. Like, what do you want your trading business to look like? Do you want to be, do you want a lower strike rate but more trades? Do you want a higher strike rate? It's ultimately only you can answer that question, but definitely your strike rate will be higher if you also wait for a flip, but it's not really necessary to do so. My opinion is you will miss trades. Does anyone else have any questions, or how many trades I take every week? It varies. Probably average about 8 to 10 a month. So it's usually, but usually it's probably two a week average. But some weeks are far busier than others. Sort of whenever, as I say, whenever the market is in a good phase, like it's early in the pullback or early in the continuation swing trend, that's when I tend to be more active. And then as price sort of moves further into the run, and I'm sort of anticipating more of a pullback, that's whenever I sort of become more conservative. But 8 to 10 a month, I'd say, would be the sweet spot for me. All right, Charlie, thanks very much. Hope you enjoyed it. Have a good one yourself. Yeah, so there's the thing with trading. It's like it never gets easy on anyone. It's like you can be consistently profitable, but it's like I know whenever I talk like Matt and Tomas or any of the experienced students around, it's like we never sit around and say, "Oh, that last month was class. It was brilliant. It was so much fun." It's like you're always sitting around and you're like, "Oh, I missed this trade and I messed this up." It's like, oh, trading's an incredibly hard endeavor, and it's like it gets easier, but it never gets easy. So a massive important like that's part of the reason why I love it, because it's like I know for a fact that a lot of people have left the community in the last sort of 6 months as the strategy sort of the strategy wasn't working as well, and I just look at it as like that's a good thing, because whenever the good times come back again, they're not going to be here. There's going to be less competition to sort of take advantage of the wins. But yeah, Lord, market conditions have been tricky for the last 6 months as well, so don't beat yourself up, but just be grateful that you've sort of had the opportunity to learn during this period, because when the good times come back, which they always do, like, because the old strategy we used to trade, like, basically stopped working as well after COVID, so we sort of moved on to this here, and now I know for a fact the old strategy is doing really well, while this is sort of not doing as well. So Lord, everything goes in swings and roundabouts. So just be in a couple of years' time, you'll be grateful for having gone through this period where you sort of had to learn in the hard times, because basically you'll be a far better trader because of it. Trading plan, I would say, has become a lot simpler. Yeah, it's definitely become a lot simpler. I used to have a lot of different setups, but I used to be more of a swing trader. So whereas now it's a lot more like I have a trading plan, and I have a trading plan and I have a trading playbook. And the playbook is basically just the trading plan distilled down into, it's pretty much just like a trading checklist, just for exactly what I'm looking for um in every situation. And yeah, the trading plan is it's more like a business plan for my trading business, where it has like, my risk and how much I risk per trade, my max loss, like all those sort of things. Like, but yeah, the playbook's more than enough. That I just sort of had the more complex plan from the old strategy and sort of copied it over to this here. Um, yeah, look, the last 6 months, it's no coincidence that Ukrainian war kicked off and things sort of got a bit difficult. It's like, because even I was talking to Matt yesterday, and it's like, we used to religiously trade with a 2 pip stop in EU, and like it worked so well. And I used to take like 20% partials of 4 or for break even and just religiously target 10 or, like, that was just it. That was the plan. Whereas whenever the volatility increased because of the Ukrainian war, all that just stopped working as well. It's like, the no tags increased because 2 pip stop wasn't sufficient. 10 or when I started sort of increasing my stop loss slightly, the 10 or became harder to reach, again, just because of volatility, and then moving or using the partials to break even as well. It's like, if you're getting them with a 4 pip stop, it doesn't really make sense to me to be waiting 16 pips to get to break even. Whereas when I was using a 2 pip stop pretty much in every trade, it was only 8 pips, which was a completely different thing. But yeah, I would agree with Charlie. It's the fundamentals, I think. But it'll settle down. Like, the markets adapt. Yeah, as well as the Ukrainian war, like, you have to remember there's been the inflation and everything. Like, there's been a lot going on in the world in the last 6 months, so it's no real surprise. But it's like, people say, "Oh, does the strategy still work?" It's like, it still works, because you can still see the M15 POIs being respected. Like, that's not the problem. Market structure's still there. The supply and demand's still there. It's just that the M1 entry model hasn't been working as well, which is again why we've sort of started working on like an M15 strategy to work alongside it, which will obviously be lower risk to reward, but obviously you'll get involved in more trades. It'll balance. Like, what I found with sort of the last 6 months is that you'd have like a really good month and then like a really quiet month. Whereas everyone sort of would like to do like the 5-10% a month. Whereas I find it's been a lot more swingy, would be the word, over the last 6 months. But look, the good times will come back. Like, everything will settle down. I think people are talking about inflation bottoming out now or topping out now, so that'll probably help. And yeah, you'll just start noticing you'll just start noticing the M1 entry models being respected a lot more. That's pretty much all I can say there. That's how I'll know. Um, as I say, like from the M15 up, everyone's still been working beautifully. Like structure's still there, supply and demand still there. It's just literally the M1 entry models weren't as clean. So whenever they start being respected a lot more, um, that's how I'll sort of know things are returning back to normal. But so any other questions, guys? Will we call it a day there? Right. Well, thanks very much for coming, guys. Hopefully I took some value from that. Hopefully I didn't ramble on too much talking nonsense. But if you have any questions, Ron, just tag me up in Discord and I will get back to you. Thanks very much, guys. Have a good one.